Look, Maya, let's be honest.
Mm-hmm.
Trying to explain cryptocurrency to someone is...
Laughs. Yeah, that sounds about right.
You're drawing diagrams. They're just staring at a squirrel outside.
Exactly.
But every now and then something so monumentally chaotic happens that even the dog, Gary, would pause and look up. And that is precisely what just happened with Bitcoin.
Mm-hmm.
The digital gold, the thing your nephew will not shut up about at Thanksgiving, it just took a spectacular tumble. We're talking a fall from over $112,000.
Wow, that is a steep drop.
It makes Wile E. Coyote's falls look like a gentle step off a curb. And if you're one of the millions who jumped in recently, you're probably feeling a certain tightness in your chest.
I think a lot of people are feeling that reality check right now.
The dream of a Lambo has been very quickly replaced with maybe a used Honda Civic. So the big question on everyone's mind is, of course, why? Why did this happen? And is your money safe?
Right, what lit the dumpster fire this time?
Exactly. We're going to put on our financial water wings and try to figure it out. So get this. It all started on a perfectly ordinary Tuesday in late August. Bitcoin was trading comfortably. Investors were posting rocket emojis.
Right, everyone was feeling invincible.
Diamond hands. All of that. I remember seeing it all over my feed. And then the digital equivalent of a trapdoor opened. The price just wobbled, then it dipped, and then absolutely plummeted.
It was sheer pandemonium.
I heard Coinbase and other exchanges were crashing. It was a digital bank run. Everyone trying to get out the same door at once. Traders who went to bed as paper millionaires woke up to find their portfolios just decimated.
A brutal reminder that fortunes can be made and lost in the time it takes to microwave a burrito.
Chuckles, perfectly put.
And within 48 hours, Bitcoin had shed nearly 30%. And when Bitcoin catches a cold, the rest of the market gets the flu.
Exactly.
It dragged everything down with it. And as the dust settled, the blame game began. Was it a whale, a coordinated attack, or was it something bigger? Okay, so break it down for us. What were the factors? First, the big one. Whispers of a global economic slowdown. Economists have been ringing alarm bells for months. That made investors everywhere jumpy. Then you had classic investor panic. A few large investors, these so-called whales.
So when you say whales, you just mean accounts with massive holdings, right?
Exactly.
They likely decided to take profits. That initial dip spooked smaller investors who sold, which spooked more investors. It's a feedback loop from hell.
Right, a self-feeding cycle of panic.
On top of that, you have leverage. It's a fancy word for borrowing money to make bigger bets. When the price started to fall, all these leveraged bets were automatically force sold by the exchanges.
So it's like pouring gasoline on a fire.
The perfect analogy.
And finally, Maya, there's the elephant in the room, the United States Federal Reserve.
The financial overlords.
It was a perfect storm of those forces combining.
Right. That explains a lot.
Right. So for years, the Fed had interest rates at rock bottom, cheap money everywhere. This created a risk-on environment where assets like Bitcoin looked amazing.
Okay, so low rates mean party time for risky assets.
It was a party fueled by an ocean of cheap money. But here's the twist. Faced with the slowing economy, the Fed just cut interest rates again.
I thought a rate cut was supposed to be good for markets like crypto.
More cheap money, right?
Why was it different this time?
Because this time it was seen as a panic move. It was the Fed basically admitting, uh-oh, things are looking worse than we thought. It's the difference between a doctor telling you to take an aspirin for a headache and a doctor screaming, get the defibrillator.
Laughs. Okay, I see.
So instead of a green light, it was a giant flashing red sign that a recession might be coming. And when people fear a recession, they don't buy speculative digital assets. They run for the hills. So to make sense of this, you basically have three camps of experts yelling on the internet right now. Brenda, the financial analyst, always a skeptic.
The I told you so camp.
The one who brings a raincoat to a pool party. She sees this as the beginning of the end. Chad, the crypto VC true believer. He's even got the Ethereum tattoo.
Laughing. And there's always a Chad.
The WAGMI guy. We're all gonna make it. He calls this a healthy correction, a great time to buy the dip. Alex, the tech journalist. Most of us, watching with popcorn, trying to figure it out.
Exactly, the bear.
The bewildered. Brenda's case. Bitcoin is the digital tulip of our time. It has no intrinsic value. Its value is propped up by the greater fool theory.
That's a brutal take, but common.
The regulatory hammer she warns about is a real fear.
Chad's take. This is fantastic.
We're washing out the weak hands. Fundamentals unchanged. Fixed supply. 21 million Bitcoin.
I get the scarcity argument.
but the volatility is brutal, hard to stomach. So where do we go from here? The crystal ball is cloudy, with a chance of absolute chaos.
Sounds about right.
In the negative column, if a real recession hits, we could see a long crypto winter. Prices go lower, regulators get tougher.
That's Brenda's world.
On the positive side, this crash could clear out the excess and build a healthier foundation. As central banks struggle, the appeal of a decentralized asset could grow.
And that's Chad's dream.
But the most likely outcome is probably somewhere in that messy middle. Bitcoin isn't going to zero, but it's probably not replacing the dollar tomorrow either.
Right.
It will remain a volatile, speculative part of the landscape. The only guarantee is that whatever happens next, it won't be boring.
Couldn't have said it better myself.
Now, if you'll excuse me, I need to go explain all of this to my dog, Gary.
I have a feeling he'll be just as confused as the rest of us.
Laughs. Good luck with that, Leo.